Okay, guys. So last but definitely not least, we have an amazing panel focused on crypto cards and use cases around that. And I know, look, it's the end of the day. Some of you are feeling tired, but I promise you, I know there's other people who said that this is like the best lineup. Their panel's the best. They were lying. This is actually the best panel. So welcome. I'm going to give everyone a chance to introduce themselves. I'll start. I'm Maya. I focus on payments BD at Solana Foundation.
Ahmed Zifsaf. I lead crypto partnerships at WorldPay. If you're not aware of who WorldPay is, we're one of the largest payment processors in the world. We do about $2.2 trillion in payments volume a year, which, if you think about it, is far larger than all of DeFi put together. And we focus on my team a lot on like stablecoin use cases and PayFi in general.
I'm Chris, co-founder of Defense. We're one of the leading wallet services, wallet APIs in the industry, servicing over 200 organizations in payments, banking, custody, trading, you name it. Happy to be here.
Yeah, thank you for the invite and pleasure meeting you guys. My name is Mukul. I lead the Web3 card and the crypto card product at MasterCard. So I work very closely with the wallet providers, the Web2 enablers like the issuers, processors, and so on to help the grow the ecosystem. So happy to be here and looking forward to the chat.
I'm Sam. I'm COO and part of the founding team at Cast. At Cast, we're essentially building a banking-like experience. However, under the hood, it's powered by stablecoins. So we're aiming to remove all the friction that all of us have day to day at the moment regarding moving our money from A to B and cross-border. So by implementing blockchain technology and stablecoins under the hood, we're making it easy for our users to essentially spend their money, save their money, and essentially do everything that they were able to do in their previous bank, but do it 24/7 and do it cheaper as well.
Perfect. So one of the things I actually want to start by doing is setting the scene. So when people think of cards, they think debit cards, credit card, and that's kind of typically as far as someone goes. So my first question is actually to Mukul, right? How would you break down the different types of cards? And that can be a really good way for us to frame the rest of our conversation, because this is your bread and butter, right?
Yeah, exactly. And thank you for that question. So if you look at it, right, fundamentally, what is a crypto card? When you talk about crypto card, we look at it from the same perspective as a regular fiat card. It's just different currency. So the funding source that is changing. So what we talk about is how do we layer the existing ecosystem of players that we have, existing construct that we have, onto a new funding source, which is a crypto. And that crypto can be a cryptocurrency or a stable coin, right? Now, so the versions of the cards that are out there is a prepaid, a debit, and a credit. So credit is something which is not there yet, but we have prepaid and debit. And on top of that, from a credit perspective, we're looking at collateralized credit. So these are the different flavors of cards that are out there. Now talk about MasterCard is all about meeting the users where they are. And what we saw when we started this whole product is like 2.5, 3 years back. It was mostly centralized exchanges, so offering the card on a co-branded model to the centralized exchanges, what we call as crypto card. Then obviously what we saw, the shift over the last 1 year, to people tending to hold on to their currencies in self-custody wallets. So that's when we introduced, you guys must have heard about the MetaMask card and a few other cards. So that's a self-custody wallet in what we call as Web3 card. So it's like meeting the users where they are and offering them the choice. So that's what this crypto card is, and we kind of pretty much layer in the existing ecosystem and use the power of our 150 million merchants worldwide network to power these crypto cards.
So that's a really helpful way of thinking about, one, the evolution of crypto-enabled cards, and two, the different flavors of cards. But one thing I wanted to start with also is, where is the market-based demand at the moment? Like, what is pushing and driving growth and adoption? We know the players who have integrated and now are offering cards, but when we think about the end users, who are they? Where are they? What are they doing? Etc.
Yeah, sure, I can grab that. So I think we're seeing huge use case for those who are already on chain, whether that be they're paid on chain or whether the local currency they earn, the preference is for the individual to be on chain and to remain on chain. So we have a huge use case for that. Secondly, those who are trading in Bitcoin, Ethereum, Solana all day, every day, moving money from an exchange to a bank account can also be difficult. There can be delays, it can be expensive, there can be a lot of extra questions. So having a crypto card where you can remain on-chain and essentially move the money freely, quick, swift, and spend, we're seeing a huge use case for that as well.
I guess out of interest, I don't know if anyone else wants to chime in, right? Because we're sitting in New York, and this is part of Solana Accelerate. Accelerate US adoption, interest in crypto. But in reality, a lot of the utility isn't actually happening here, especially from a retail perspective. And so it'd be interested to hear any of your thoughts about market usage, engagement. Ahmed, you look like you're ready. Go ahead.
I would say there's kind of two types of customers I like to think about. There's kind of what Mukund was talking about. You have these exchange customers who the distribution model for them is, I have crypto, I use crypto.com, therefore I see the card over and over again. I want the rewards. So you have sort of this customer type where it's you're crypto, not maybe fully crypto native or a degen, but you're using these exchanges and you want to use these cards. And I think in developed markets, a lot of it comes down to what do rewards look like? What am I able to spend on? What am I able to do with my funds on my card? And then the whole second element, I think, follows crypto adoption more generally, where it's LATAM, APAC, these areas where you're using stable coins and you're using cards as a method to kind of protect your savings, or as a method to be able to easily transfer money to your friends or family and then use those funds. So I would say it's not very different than general crypto adoption with the crypto card, but I would say distribution is still not, I would say, fully baked in yet. I don't think it's the primary method that I find people are using to pay with crypto today. But I do think it's kind of a great bridge, basically, to get us from, typical fiat and card payments to crypto payments, because it kind of looks the same.
I guess to latch onto something you just said, right? It's not obviously the main main method in which people are using to pay with crypto, etc. What are the gaps? What's missing? And that may be, Chris, where you come in, right? Is it from an infrastructure perspective? What do we need to get that, to drive that adoption for crypto cards?
It's a very complex question. It's a bunch of things, right? And it comes together. It's hard for today. We mentioned the classic use case of, I have a lot of crypto, I'm a trader, I have these things and I want to be able to spend them. I want to be able to turn them into stable coins and use my credit card when I'm going out to a restaurant or, okay, that's a fringe still in the wide, spectrum of humanity. That's a fringe. Then we have partners like Kulipa who are doing prepaid cards in LATAM on in certain corridors in certain countries. That's more for remittance. That's more for and that's, of course, that's much more everyday life than the crypto trader, who wants to yield more, get more cash back, et cetera, et cetera. When I was talking the other day with the guys from MasterCard, they were telling me about this onion-like structure they have, where you have different types of partners, and at the core of this, if you want to be able to tap into pure liquidity very fast and be able to pay a yacht for millions and millions of dollars, right? Very fast. You need to be able to access that core of the onion. And before that, you have tiered systems of that you get access to as partner 1, 2, 3, et cetera, et cetera. You might know better the terminology than me, but before crypto can actually, before a circle, before any kind of big giant player with a lot of liquidity will be able to match that level of instant access to liquidity, ease, etc., it's going to take some time, and it's going to take regulation. It's going to take a lot of efforts, right? And it's a collective effort. It's a lot of things together. So I would say it's less of I see it less of an infrastructural problem at this point, less of a technical problem, and more of keep hitting the market with great use cases, keep hitting people with things that will convince them to use stable coins and other types of digital assets until we reach some tipping points, various different tipping points. And tipping point after tipping point, we will see kind of, crypto becoming more agile and working together better than the fiat rails.
I was going to say, kind of on your point about tipping points, at least in my head, there's two major tipping points you can really imagine. It's one, on the merchant acceptance side.
Yeah.
So can you go anywhere and will they accept this form of payment? And the second for me is payroll. So the moment that you're getting paid in stables or in crypto is the moment that you want to be able to spend it more regularly in your daily life, to your point. It's not this investment vehicle turned into yachts. It's something that I use every day. And I think that's a really interesting inflection point. Once we reach that stage, where can you use your money? How do I get that money? Is it just seamless in that way? It's almost like interoperability. I know it's a catch-all term, but it's kind of what I think.
And if I may add, from infrastructure perspective, what we see is over the last 2 and 3 years is that there's a lot of demand for people wanting to have this kind of card, and to pretty much smaller wallet providers to some big players wanting to have the card. But a lot of from it, it's not necessarily, as you rightly said, it's the tech infrastructure. It's more about the other kind of infrastructure, like the regulations and all that has to be there in place. And to the earlier question regarding which are the markets where we see the most adoption, I think we're talking about Europe is leading the way in terms of adoption of the crypto card. Then we have Latin America. And Latin America is mostly based on the use cases, the primary use cases that are really emerging out of. And we definitely expect to see a lot more activity with the regime change in US. So from that perspective, market perspective is those three big geographies. But from the perspective of infrastructure, what we see is that we need to have more and more of these Web 2 enablers, what we call as, to your point, Web 2 enablers means the combination of the issuers, the program manager, the processor, the core guys who support the fiat card are pretty much also used in this crypto card and the Web3 card. We need them to step forward and say, you know what, we are here to support you and we are here to launch the card. Now, the problem why they're not stepping forward is because of the lack of regulations. There are a lot of geographies where there's a lot of pent-up demand, but there are not many banks or issuers or BIN sponsors who are supporting the launch of the card because of the lack of regulation. So I guess as we see more and more geographies and jurisdictions coming up with good supportive regulations, we'll see, these kind of cards getting adoptions in several markets.
I guess to push back slightly. So, of course, regulation shapes everything. We've known that. We've felt that as an industry. But when we look at the infrastructure stack, because we are starting to see regulation shift positively, when we look at that infrastructure stack, are there particular gaps that feel very big and that are beyond just, regulation needs to shift? Genuine question. Maybe it's not the case. But are there particular gaps in that stack that aren't being filled where,
I mean, I can try to answer that. Is one of the fundamental, if you break down the whole ecosystem, you got, if you talk about from a Web3 card perspective, you have, and if you think from the perspective of a general system design, you have an experience layer, a process layer, and a core layer. The experience layers belongs to the wallets of the world. The process layers is the tech providers who connect the Web3 to the Web2. And then you have the core, which is pretty much the Web2 established entities like the issuers, the scheme providers like us and Visa, and the program managers and so on. So if you break it down in those three, definitely from an infrastructure technical perspective, there has to be an integration between the wallets and the tech provider. That is something which has to happen in a very seamless, so that at the end of the day, user doesn't care whether it's a stable coin or a crypto or that. They want the same set of experience that they get from Apple Pay and Google Pay. Simple enough. So that's what, to get to that level, that kind of integration has to be very, very seamless and very fast. And on top of that, the similar tech provider has to have the same kind of integration with the back-end players like the issuers and the process and so on. So those are the two key integration components that we're talking about. And to be able to make it borderless, because these cards are borderless, right? So all these scheme providers and others have to have rules in place where you issue the card in one place and it works worldwide. Today, we do not have that for a lot of different reasons. Pretty much you have to get licenses in each of the region and so on and so forth. So those are some of the other things that need to happen before you get to a point where you issue a card sitting in Switzerland, it works worldwide on day one. That's for that.
So you mentioned something cool, right, which is about the different layers. One is the experience layer, and one thing that Cast in particular has done really well is that experience layer. And, now that crypto-enabled cards are becoming more and more prevalent, it'd be really interesting to hear your thoughts, Sam, on distribution, differentiation, and how to lead and really push on that angle.
Yeah, I think there's lots of cards out there that you can deposit crypto and you can spend. There's no hiding from that. But I think the way we're looking at things at Cast and what the products that we're building is, if we can create a user experience where they can deposit fiat on many different rails, they can withdraw fiat on many different rails, and then in between we do all the heavy lifting to give them the benefit of stable coins, which essentially removes the cost, that it makes things quicker. We know we're building a product that it solves a lot of those problems for the end consumer that they simply don't have to even think about. To go one step further, they can use our app, they can get all the benefits of stablecoins, and they may not even know what a stablecoin is, how it moves. They don't need to know about Solana chain, Ethereum chain, am I sending it to the right place? We eliminate all that friction, and what may seem simple to a lot of us who work in crypto, it's not to everyone. So we think if we facilitate a lot of that heavy lifting in the middle, that the adoption comes naturally from that point.
As part of that adoption loop and that experience layer, it'd be really helpful to also hear your thoughts on local stablecoins, because a lot of the narrative around stablecoins is about USD-denominated stablecoins. And of course, they dominate. The figures show that. But there is definitely a place, and likely a growing place, for local stablecoins, whether it's from a defensive perspective, whether it's from the fact that governments around the world probably don't like dollarization of their economies. So it'd be interesting to hear from your perspectives, where do you see that immersion evolving? How do you see that being embedded in some of your products potentially?
Yeah, I can take a stab at that. So essentially, if you look at, we do see the emergence. I agree, USDT, USDC, and there's a dollarization of stablecoin definitely, but we do see emergence of EuroC, so other currencies also coming to the picture. To the question of whether would this lead to dollarization of economy, I think what I see is what USDC and USDT is solving for is an efficient distribution of dollar in economies where there's not easily available. So that is a very, very fundamental, and if you look at all these emerging economies and underdeveloped economies, it's a very, very fundamental problem, and it's solving that. It's making the whole process more efficient. Would this lead to dominance of dollar and would lead to, it's too early to say that, but I kind of don't agree with that. The way I see it happening is you have established a product market fit for stablecoin in the payment use case using USDC and USDT as a mechanism. And then sooner or later, people will realize that, there's more role for this stablecoin for other currencies. And that's where the emergence of other currencies will start happening, and we'll see people, and with the regulations coming into play and trust in the whole process and the technology stack that's already out there, I can see in next 3 to 5 years emergence of more and more stable coins for other currencies.
Sam, out of interest, you look like you were ready to share some thoughts on local stablecoins.
No, that's fine. Fine. We've moved on.
Okay. Anything else, Ahmed?
Yeah, I was going to say, I really love this question. I've been in a lot of stablecoin panels, and no one asks, what is the effect of putting dollars so easily accessible to everyone? And I'm always surprised to find countries that normally have high capital controls suddenly allowing the flood of adoption of these assets, because it makes their monetary policy a lot harder to really manage. That's outside of my job description to really think of the geopolitical implications, but it's something that I'm always shocked to see. But if we're going to talk about specific regions that I think that will really see adoption of their own local stablecoin, I was just at Web Summit Rio a few weeks ago, and I think that Brazil is a place where they don't really want dollar. Mexico is a place where they don't really want dollar. They want their own currency. They're very proud, nationalistic in their own identity and their own payments sort of stack. But I think it comes down to a very human element of what are you seeking to obtain? Even the very concept of a stable coin is just very much derived from like the dollar being the global currency. You know, if I'm Egyptian, if I'm using like the Egyptian pound, I wouldn't call it an Egyptian stable coin because it's not a very stable currency. And that's sort of like what exists all around the world. But anyways, that's my little add-on there.
Maybe like, because I feel like what we're trying to pinpoint here is the use cases, what's going to work, what's going to actually make this industry, this technology go to the next dimension. Well, a couple of points. First, it feels like we are very quickly, without noticing it sometimes, mixing the user experience and everything that is consumer related with a lot of things that are in the background that are very much infrastructural, B2B, behind the curtain operations that are heavily required for people to get an enjoyable, cost-efficient, fast experience at the end of the tunnel, right? And so when you ask about like what's it going to take for us to go to the next level, what we're hearing a lot is privacy, right? Like we're hearing PSPs and merchants saying like in the Web2 world that are interested in eventually getting on chain, they're saying like, hey, I cannot have my clients knowing what price I'm giving to my customers, because that's just going to create so much problems, right? And so, you know, you have private chains that are trying to solve this, but we have brilliantly Solana Foundation that has created this like confidential balances extension that we're working on, right? So, you have that issue. You have a tons of I'm forgetting the list, but like you have just a lot of issues that are that without solving these things, we'll never cross the bridge.
Yeah. And I guess doubling down on that a bit, right? So you mentioned privacy, right, as one of the things behind the scenes. I guess you could call it as part of the infrastructure flow, right? As one of the things that we need to think about and be trying to address as an ecosystem. One other thing is actually thinking about how money flows in and of itself. And so there's been growing talk of, for example, payment intent standards in crypto. So, you know, we have the UX layer, but how far are we truly from crypto native intent layers being built into point of sale systems, apps, more natively, right? Because that's another optimization that we haven't quite got yet. So, I mean, Chris, this is in the infrastructure stack. I imagine this may be something you're thinking about, viewing. What are your thoughts on that?
So, am I phrasing the question properly? If I say that, like, you're looking for the next biggest issue aside from privacy? I mean, so, you know, the previous panel was talking, Yuma Finance co-founder, he was talking about TVL as total vanity metric stuff. I see the point. I find it funny, but when I go ahead and I talk to all of my PSP customers and they want to park their money into yield generating areas and they look at all the options and they look at the TVL, they stress out. They stress out and they go, I'm not going to put my money in there. And they want to put 400 million, 600 million somewhere, but they won't. Right? So we're looking for options, etc. MO is an amazing option. But you don't have that many out there. That's the truth. And so, like, especially when you want to get into decentralized finance, etc., which is also another hurdle, by the way, like, you know, how are regulators going to be perceiving those who claim to be decentralized enough to kind of remove themselves from KYB requirements, etc., etc. There's so much to be said about that, right? But, you know, like, I just think that this industry still needs maturing and it needs help from Web 2. It needs Web 2 banks, financial institutions, you guys to come in to find the recipes. I have a lot of projects in mind, like Ubix, Tony McLaughlin, like amazing project that is actually trying to turn stable coins into digital checks, for instance, and requalify a couple of things to make it easier for TradFi to get into blockchain. So yeah, I mean, we definitely need a year or 2 or 3 years extra of like just more of those traditional players to get in, learn, test things, experiment, connect, integrate, and there's going to be failures. There are going to be a lot of failures still, but some things are going to work, And when that works, it's going to just contaminate the pool and everyone will want to do the same thing.
But I guess if you were to pick, let's say, one or two things that are the next big challenges and that will really push crypto-enabled cards forward, what would you say is needed beyond privacy challenges?
I mean, I can talk about like a couple of, based on the experience from MetaMask card that we launched, right? What was one of the prereq for somebody wanting to use a MetaMask card is that you have to have a stable coin on an account which is you delegate to a smart contract to pull at the time of authorization, right? Yeah. So now, just before you get to the stable coin, people have like, the different currencies in different chains, and they have to go through several hoops, swap, bridge, and all those things. That's a nuisance. I mean, if you want to get billions of users, all that has to happen very, very behind the scene. It's all like, just click of a button, not even clicking of a button. With the use of agentic AI and all those different things that's coming up, we can get to a vision where when you tap the card, it should automatically know the wallet that's attached to it. It should automatically know where to pull the source of fund from. Yeah. It should be automatically able to do the bridge with the consent, obviously, and the swap and all that happens, which is very manual. On top of that, the point that you raised about, the paymaster, why would you have to worry about paying in Ethereum while you're doing it? That's bullshit, right? All that has to go away. And how do we handle that? That is, I believe, from an experience perspective. If you can make it happen as seamless, as easy, and I talked about Apple Pay, Google Pay, similar experience in the e-commerce world. If you can manage to do that, that's one of the biggest, I think, that would be the one big change that would pull in the billions of users and grow the adoption of the crypto card and the Web3 card in general from an end user perspective. Besides that, obviously, there are more from the merchant perspective, but I see the contactless and those problems are definitely solved because all these cards you can basically provision into your Apple Pay, Google Pay, and all that. It's mostly the e-commerce where I see some of the big challenges.
Just to add in on that, last week at Consensus in Toronto, our card issuer actually gave a little demo on, he had his own POS terminal that they've built, and they could actually key in 20 USDC and then using your actual card that is only loaded with cryptocurrency, so only with USDC in a self-custodial wallet, you could actually pay on this new POS terminal, and it would deduct 20 USDC directly from your wallet, and 20 USDC would be passed on to essentially the merchant. So they believe that these POS machines are going to, whether it's 1 year, 2 years, 5 years, 10 years, they believe that in the future that POS machines will have the option for that, and that we all might be paying for our drinks and dinner with USDC in our own wallet, in your own Cast wallet, obviously.
Naturally, there's no other real choice. Joke. Okay, so I guess, Chris, you were going to say something as well about what's the top one or two blockers or challenges or things that we really need in order to push the utility of crypto cards forward. You were about to say something, I think, before. You had spoken a bit more broadly about it, but if you were to give a headline of the top 1, 2, what would that be? What would that look like?
I think it starts with one thing, which is, and it's pretty funny that at this point it boils down to that, right? Like we have all this fancy technology, this beautiful ideal behind blockchain, etc. And at the end of the day, what we desperately need today is for financial institutions for it to be easy for financial institutions to play with, use, etc. And that is, what Bridge did with Lead Bank is almost as it's an accounting innovation, or it's not even innovation, it's like a trick, right? So because there's so much risk from funds coming from Africa or whatever country landing in the US, because it's such a risk for a bank like Lead Bank or any bank to hold that in a certain way, without getting into a heavy compliance hoops, which are too expensive and just too annoying, and it just kills your reputation and your scores, etc. They found a way to just call that I can't remember if it was like a named account instead of a something account. And so all suddenly that was possible for Leadbank to welcome all these flows that were coming from Bridge, but from around the world, right? So like that was I would call that a recipe. It's a small thing, but they managed to crack it, and it allowed for this entire flow of money to circulate through the U.S. Without any hurdles. And so more of those recipes at every level of the stack, at every level of the industry, are ingenious people that will find these ways of making sure that we don't need to go through this layered friction, which is a healthy layered friction, right? Like it's a rule book that has been built over decades and decades, but that is just difficult that is not welcoming for crypto as it is, as such, right? So we need to work around and find ways to just squeeze it in.
Perfect. So we've obviously been focused on cards, right? But cards are just one form of payment at the end of the day. So if we're to zoom out slightly, what do you think? Two questions. I'm going to ask you two questions. One, what is your hot take, if you have one, on crypto cards, firstly? Controversial take, etc. And then the second one is, what do you think is the next evolution of crypto payments more broadly? What does that look like? We've mentioned e-commerce, we've mentioned merchant payments, but what are your thoughts on that? Ahmed, do you want to start?
Sure. And my hot take on crypto cards, I mean, even though I work at WorldPay, which process I think something like 12% of global credit card transactions, I wouldn't say credit cards are like my main passion in life. I think they're just like a means to an end. Like you want to be able to securely transact, a merchant wants to securely be able to accept the funds, and that's sort of what it does, and everyone around the world knows what to do with it. For me, the really exciting bit about payments and crypto payments as a whole is like on the B2B side, on like the instant settlement, like being able to use pretty much bypass our existing infrastructure, legacy infrastructure that operates in like a non-instantaneous fashion, in a non-traceable fashion, in a fashion where you can't like work on things like privacy or decentralization or even touch these topics because it's so entrenched in institutions and how institutions talk with each other. So like on that element, I think seeing more and more companies like WorldPay or other payment processors and big payments companies move more on chain, where you're starting to see an acceleration of how quickly payments can kind of be accepted and be used. And I'm interested to see like that added liquidity, like where does that go? And like what are the next like phases of DeFi innovation where that liquidity is sort of going to be pushed towards? Yeah, I would say that's like my hot take and sort of like what gets me excited about like the next phase of crypto payments.
Just before we move on to Chris answering those questions. So you said, of course, how DeFi could be almost like leveraged and utilized within crypto-enabled payments and the next wave of innovation in that space. What do you think that could look like?
Yeah, I mean, this is where I spend a lot of my like brain power, but not a lot of what I can do on a day-to-day basis, just like where, different companies are on sort of that spectrum. When you think about DeFi, I think about like obviously yield is like a big thing on everyone's mind. So like what does it look like for like programmable vaults and treasury management to really take like scale? Like again, I'm only going to use my own company because it's my own or like the company I work for. But you're talking about trillions of dollars that could be put into like certain types of vaults or certain types of like lending pools, which can really just change the dynamics of like what you're doing like around the world, and you can instantly like get access to those pools. The second element you're really thinking about is like on the payment financing side, like which really enables the instantaneous settlement. Like what does that look like at real maturity? I mean, WorldPay has been doing USDC settlement for a couple of years, but like that's just a couple of years and we haven't really pushed our full metal and resources into it. Like what does that look like in terms of what we can do for like optimizing in this like high interest rate environment, like businesses as like funds as a whole. So yeah, I would say like those are like yields, like programmable treasury management. Those are like the most immediate things that I think we can solve with DeFi, along with payments. So I guess PayFi in that way.
Nice plug. Chris, what are your thoughts?
Contactless payments, not talking about blockchain here, contactless payments is just something that is growing, right? Even today, and the biggest segment of people using those are Gen Zs. So it's just going to grow, right? And I can't remember the numbers, but if you look at Apple Pay, Google Pay in the US, we're about like 80% merchants accepting that. We're about like 50% people using it every day. And it's equivalent around the rest of the world outside the US. So it brings me naively to think that Apple Pay, Google Pay has a pretty hawkish position when it comes to distributing. The question I'm trying to answer to myself is crypto, is blockchain going to intervene first at the consumer-related side, on the user-facing side, or first in the background, powering the infrastructure behind at Apple, at Google, etc., before it reaches people for operational efficiencies, because it's just much easier, in the background to send money around when you use tokens on a chain. So that's the question I'm answering myself. And then, when we talk about chains, which chain? Because I can mention a bunch of things, happening around, and everyone's like happy because they're using EIP, whatever. Sure, but that's not on Solana, that's not on Stellar, that's not on Bitcoin. So what are we talking about? So yeah.
Before, I'm going to follow up with one quick question, right? So what do you think is going to come first? Do you think it's going to be the consumer side or in the back?
A mix of like steady progress on the infra side, the B2B side, the operational efficiency, because things are scheduled. Teams in every FI are thinking about it around the clock, and they want to move forward because they have different agendas. But you'll have accidents. You'll have beautiful accidents that will happen, in the games and stuff, and like social apps and TikTok stuff. You'll have beautiful stuff happening, and that will create like, I would say a calling effect between both sides. Yeah.
Yeah, two things that I'm excited about. First, from the consumer's perspective, I think to your point, right, people should not have to think about payment. Payment is like you're just going about your business, you like something, you should be able to buy. It does not matter whether you're buying from a cryptocurrency or a regular fiat currency. So I don't see a vision. For me, the vision is that there should be one card. That one card should be able to handle different types of funding sources. It could be a US dollar, it could be a USDC, it could be a Bitcoin, Ethereum, whatever you choose. It could be on any chain whatsoever. That's number one. Number two, that same card should have the flexibility to offer you a prepaid, a debit, a credit, a rewards, everything. You don't necessarily need to have a wallet with 10 cards with 10 different flavors. So that's the kind of vision from a consumer perspective. And there are technologies, and I think I don't know whether you guys followed, but MasterCard launched something called as One Credential, which kind of allows for that. So, and on top of that, you can add BNPL, like buy now, pay later. All that under one card, everything from a consumer perspective. From the infrastructure perspective, in particular, how do you scale this product? And the challenges that we face is where I see stablecoin can be a powerful use case is helping with the settlement side of the house, right? Where how do you enable smaller issuers to come forward and become MasterCard principal issuers is by reducing the need for collateralization, which is like, if you can enable 24/7 settlement, that would mean, the settlement happening every time of the day. Then you, as an issuer, if today it's happening 5 days, then you have to worry about 2 days of collateral to be deposited. All that can be taken care of if you have 24/7 settlement using stablecoin. But that's the journey we're on, but we're soon going to happen.
Sam?
I'll be quick. Mukul, I think you were talking about the Cast card then when you were describing that product. My hot take is it won't be in just the crypto card. It'll be the product that offers everything. So the card that just simply works, but somewhere someone can save, somewhere someone can spend easily, they can send their money easily, and finally do it all in one place. So exactly what you guys have just talked about.
And what do you think is the next? You said that's, part of your hot take, but any other thoughts in terms of the next evolution of crypto-enabled payments in addition to that?
I'm a big believer in the POS machines having stablecoin payments. I think just because I saw it, it sold me in real life.
Okay, well, we're looking forward to that.
I'm happy that, it's a good sign when you know that we're not talking about, is it custodial, is it non-custodial? Like, we haven't mentioned this today, so that's good.
We've gone past those days. I remember being on a panel talking about stablecoins at a major traditional finance conference, and I had to start by explaining to them that they thought they were CFI, and I was like, oh no, you're TradFi. Like you're definitely not CFI, you're definitely not DeFi. So it's nice now that we have big players come into the fore who understand what's happening, how they can leverage crypto, and how almost we can work together rather than viewing each other as oppositions, because that was definitely the narrative for a period of time. Well, thank you guys. That brings to the end our panel. Hopefully you enjoyed it as much as I did. And that's also the end of the talks and events. So, I mean, next we're shifting into a happy hour, which is outside. There'll be food, there'll be drinks. Get merry, not too merry. This is still a professional event. But yeah, thank you so much, everyone.
Thank you, guys.
Thank you.
Thank you.